How's it going, everyone? It's Leo here. So in this video I'll be talking about Quicken Loans and my experience with them and what I would recommend for anyone to do when they're buying their very first property as well, and whether they should use Quicken Loans or use someone else. Now, I'll be going over the reasons as to why I decided to use Quicken Loans and why it might be beneficial for someone that was in my similar situation back then to use Quicken Loans as well instead of another mortgage lender. So around half a year ago I was looking to buy my very first property, and at that time I'm a college student, so keep in mind I'm not really working full-time, and I was working pretty close to full-time, and even then someone in college working full-time probably isn't going to make that much money in terms of income because I haven't graduated yet, so they're still probably working minimum wage jobs or maybe $10 an hour, nothing crazy. So my W-2 wasn't as impressive either, and I only had one W-2 when normally you need two W-2s to actually get approved for a mortgage. So I went to two people before I actually got approved by Quicken Loans. First I went to Chase, and I met with them, I sat down with them. They told me I had everything ready because I had the down payment ready and I had my credit score was good, but I didn't have the 2 years of W-2, so they told me no. So then that happened. I went and I looked into another local lender here in Miami. I think it's called PRMG if I can't recall. They told me the same thing as Chase did. My credit score was good, my income was like decent enough, my down payment, but when it came to my W-2 of like past 2 years, they said it was too little. The income wasn't that big of a deal because they could approve me for something smaller, but it was the main thing that they didn't have the 2 years of income to really look into it. For some odd reason, there needs to be 2 years of W-2 for them to even consider you. So then I started looking into Quicken Loans, and they had this one exception where if you've been going to college, they take all your years in college as work experience, and as long as you're working in the field that you're studying, they will take that into consideration as the years for like W-2, let's say. So for me, they actually took into account my internship at the time that I was working for my W-2 years since I was in college those previous 2 years. So thankfully Quicken Loans did approve me while the other two lenders did not. And at the time I was in Miami and I was actually looking into a property in Michigan because I am moving there. So they did initially offer me a 5% interest rate because it would be a primary home residence. Now this is where I have like, I guess my first issue when it comes to them is because they told me 5%. They made me get locked into that price, and then later on, once I was through the process, I paid for the inspection when I found the property, I paid for the appraisal. Then it was that they told me that I couldn't do the primary home because I have to live there within 60 days of buying the property, and I'd be moving out there 6 months from now. So instead they moved me into a second home purchase, which is actually 10% minimum down payments instead of the 3%. So that did affect my budget a little. I didn't see that coming, but oh well, that was just my first issue. I do like them for the most part that they did approve me, but that was my first concern with them. So for the second home mortgage, my interest was actually 5.5%, so it was actually half a percentage more. And there were some moments throughout this contract where it also leads to my other issue, is there was a point discrepancy. Quicken Loans might have approved me simply because of my age and they're trying to open up to a larger market. And they do advertise low interest rates, but they hit you with points. And that's the thing, a point is basically how much you pay for the loan itself. So let's say 1 point for $100,000 would be $1,000. So now this is a kind of sneaky tactic by Quicken Loans to advertise a lower interest rate and then hit you with the points. But I guess it has its good and bad because really you are getting a lower interest rate, but you're getting hit with the points. But I would say long term, I guess the lower interest rate would be better because at the time, second home mortgage interest rates were like 5.7, 5.8. So it all depends on really what you're looking into, but at the time, I guess, yeah, I just didn't see that coming, so that's why I found it an issue. So originally I was told that the points would be around 1.1, 1.2 in the primary home. And when it came to the secondary home, when I was reading through the contract, apparently the points became 3.5, and that makes a big difference. That's almost like $3,000 more in terms of how much I'll have to put at closing. So it leaves you wondering, oh, if this is the first time, is there going to be a second time? Is there going to be a third time? Is it just going to keep going up until I don't have enough for the closing costs, and then I just waste it out on the appraisal and on the inspection? And by the way, when it came to the appraisal, that was pretty straightforward. That was $500 from them, which they took aside from me out of direct deposit, and then they just held it until I gave the A-OK to actually go through with the appraisal once I thought everything was good to go. And once they did that, it was done within a week, and that one's pretty smooth. Now, closing is the most important process of the whole mortgage, simply because if it doesn't close, you don't get the property at all, and you've wasted out on the inspection and appraisal and any other money you spent on that property. So you got to make sure that your lender will actually close. Now, when it came to Quicken Loans, the average mortgage time closing would be between 25 to 45 days. They did it in around 30 days, so that was pretty good. They had everything good to go by the time it needed to be done. All we waited for was basically title to get their stuff ready, which they sometimes take some time, and the association, since I was buying a condominium, so some association paperwork, all that stuff was around last minute. But Quicken Loans was good to go, and we were just waiting on those other two third parties to get their stuff ready. Best thing by far when it came to Quicken Loans is the team that they have ready for you. I was new at the time, I didn't have any experience, I'm going into my very first purchase, and that's pretty overwhelming. I didn't know anything about when it came to the mortgage, when it came to the bank, when it came to the appraisal, inspection, nothing. They had a team of specialists ready for every single part that you could think of when it comes to a mortgage, and they had all the answers to your questions, and they really help you out through the process and make you feel like you're not alone. This is something I can't really say since I don't have experience with any smaller lenders, but I will say that since they are smaller, they're probably not going to have the amount of resources that Quicken Loans did have, since they're a major corporation, and since they're looking out to be more flexible to a newer market. So they're willing to help you go through all of this when probably local banks want people that are more experienced, or they don't have the people there to really help you out with any type of question that you may have, whereas Quicken Loans will. So what I would recommend is to hit that like button and subscribe. So now my recommendation, well, it really depends on where you are in life. Let's say if you're over 25 and you have experience buying properties and you have a good W-2 and you have a good credit score, well, then you might not need Quicken Loans in their team, since you most likely already know what you're doing, and you could go with a local lender and try to build that rapport with them and be a strong client with them, because, well, let's face it, that a smaller community bank will value you more than Quicken Loans, which is a giant corporation. They'll still care about you, Quicken Loans, but you're not going to be as important to them as you would be to a local lender. This is why people always recommend going through a local lender, because they'll be more flexible when it comes to major investments, lending you more monies, because they really value you as a customer. Now, let's say you were in my position and you're buying your very first property. Your W-2 isn't where it should be, but you got other stuff in order, and you're just not really that experienced and you're looking for some guidance, well, then Quicken Loans would be great for you, and it's definitely something you should do for your very first property, maybe even for your second, just to get the hang of things. Watch the video all the way through to the very end. Thank you, I really appreciate it. That really helps me out. So if you could please like and subscribe as well, since I'll be posting more videos about financial tips and strategies when it comes to high school students, college students, or really anyone that's just trying to grow financially or academically or personally as well. Thank you for watching, and have a great day. Now, closing is the most important process when it comes to the whole mortgaging. So I'm going to explain my situation for why I used Quicken Loans, and maybe if you're in a similar position to me, it'll be beneficial for you to use. So now I'm going